Welcome to the International Accounting Channel. Remember to subscribe to the channel, like, share with everyone. Today we share the topic of answering questions about income tax. Let's get started. Question 123. Income tax includes all domestic and foreign taxes payable based on profit before tax. True or false? Answer: true. Question 124. Accounting profit is the profit or loss of a period before deducting corporate income tax expenses. True or false? Answer: true. Question 125. Accounting profit is determined based on accounting principles and standards. True or false? Answer: true. Question 126. Taxable income is determined based on the provisions of each country's corporate income tax law. True or false? Answer: true. Question 127. For corporate income tax, if overpaid, it will not be refunded, but will be recovered by gradually deducting it from the tax payable in the following period. True or false? Answer: true. Question 128. Deferred income tax liability is the corporate income tax that will be payable in the future based on the deductible temporary difference. True or false? Answer: false. Question 129. Current income tax is the amount of income tax payable based on taxable income in the income tax rate of the current year. True or false? Answer: true. Question 130. Deferred income tax is corporate income tax that will be refunded in the future based on the deductible temporary difference. True or false? Answer: true. Question 131. Corporate income tax profit is the basis for calculating corporate income tax determined according to current accounting standards and accounting regime. True or false? Answer: false. Question 132. Taxable temporary difference arises when the asset's fair value less than the asset's tax base. True or false? Answer: false. Question 133. How is deferred income tax liability calculated? Answer: deferred income tax equals total taxable income multiplication expected future corporate income tax rate. Question 134. Book value of asset more than tax base of asset giving rise to deferred income tax liability. True or false? Answer: true. Question 135. Book value of liabilities more than tax base of liabilities gives rise to deferred income tax assets. True or false? Answer: true. Question 136. When does a taxable temporary difference arise? Answer: Book value of asset more than tax base of asset or book value of liabilities less than tax base of liabilities. Question 137. How is current income tax calculated? Answer. Current income tax equals taxable profit multiplication current year corporate income tax rate. Question 138. When do deductible temporary differences arise? Answer. Book value of assets less than tax base of assets or fair value of liabilities more than tax base of liabilities. Question 139. Deferred income tax payable is corporate income tax that will be payable in the future calculated on what? Answer. Temporary differences are subject to income tax in the current year. Question 140. Deferred tax is recognized immediately, but deferred tax assets are only recognized when it is certain that there will be profits in the future. True or false? Answer. True. Thank you for watching our channel. See you again in the next video.